Have you heard people talk about the stock market and felt confused? Don't worry, because I'm going to explain it in a simple way, like I'm talking to a friend. Hi everyone, welcome back to my channel. If you're new here, my name is Abigail, and on this channel, we talk about money, saving, investing, and building wealth one step at a time. In today's video, we're going to talk about the stock market, what it is, how it works, and how beginners can start investing without feeling overwhelmed. Before we start, this is not a financial advice. This is for educational purpose only. Our advice is that before you start investing, you do your research. So let's dive into it. One will ask, what is the stock market? The stock market is whereby people buy and sell the shares of a company. So a stock simply means a share of a company. When you buy a stock of a company, it simply means you're buying a piece of that company. For example, when you buy the shares of Apple, Amazon, Nvidia, or Microsoft, you become a small owner of these companies. So when the company grows and does well, the value of your money invested in these companies will also go up. But then when these companies struggle, the value of your money may also go down. This is why they say investing in the stock market can be risky. So how do you make money in the stock market? There are several ways in making money in the stock market. But then the two most safest way I can tell you about is one, through growth. This is whereby you buy the shares of a company and then the value of that company goes up. When the value goes up, your money also goes up. So for example, you buy $50 shares of a company, and then with time, maybe a month or two, your money increases from $50 to $80. The difference of $30 is the growth that you got from investing in that company. And the second way of making money is through dividends. So some companies pay you little amount of money for just being a shareholder of that company. So they can decide to give you 0.3 cents per share for being a shareholder of that company. Not all companies pay dividends, but some do. Most companies pay, but not all. Some pay higher, but others pay just a small amount. Why do people invest in the stock market? People invest in the stock market for growth. Saving money is important, but then letting your money sit in the savings account forever will devalue your money. Inflation will devalue your money when it sits in the savings account, because the savings, these banks give you like 0.05% per year of interest on your savings. That is like nothing. The example I gave you, buying $50 of a share, and within some time it increases from $50 to $80. For your savings account to get that growth, it will take years, not even months, years. So people invest in the stock market so that their money can grow, keep up or beat inflation. The goal is not to get rich quick with the stock market. The goal is to invest slowly and build wealth consistently. As a beginner, what should you invest in? As a beginner, don't try to invest in individual stocks if you don't understand them. You can invest in index fund or ETF, exchange traded funds. Index fund or ETF is just a collection of stocks into one basket. It's like putting different vegetables in one basket. So some index fund or ETFs mimic the S&P 500. The S&P 500 simply means the 500 largest companies in America. So if you buy one ETF, you are buying shares of the 500 largest companies in America. So you get to own shares of Apple, Nvidia, Amazon, Microsoft, Palantir, Tesla. You get to own these through one ETF or index fund. And these ones are safe because when one stock struggles or goes down, the price of one stock goes down, the other one may be thriving and the price is going up. So it's balances. So when you buy ETF or index fund, the price don't drop like when you invest in individual stocks, and when they start to struggle, the price drops, like go low, and you lose a lot of your money. But then the ETF or index fund, there is a balance because there's a lot of companies within one ETF. That's why people say, don't try to beat the market, just invest in the market. What should you do before investing in the stock market? Before you start investing in the stock market, you have to build a strong foundation. What do I mean? You have to make sure you're debt-free. You can't start investing in the stock market when you still have high interest rate debt, because most of these debt charges you like 18 to 26% on your debt. Meanwhile, the stock market has averaged 10% per year of returns. You're losing money with the debt instead of investing. You're not gaining anything. So I would say before you start investing, pay off your debt. Make sure you have emergency fund. Save 3 to 6 months of emergency fund so that if anything happens, you don't have to sell your stocks to settle that emergency. But then if you have emergency fund, you'll be able to settle that emergency. And also have it in mind that investing in the stock market should not be a short-term thing. You can't just say, I'm investing in the stock market for a month or two. That would be like trading. It's not investing. So use the money you don't need immediately to invest in the stock market. So if you have plans of saving for your wedding, saving for your house, don't use that money to invest in the stock market. Save that in your high yield savings account. Because as I said, the prices of the stock market go up and down. So let's say by the time you need your money and then the stock you invested in is down, when you sell that stock, you lose money. So don't invest the money you may need it as soon as possible in the stock market. We invest in the stock market with the mindset of long term and building wealth. Also, before you invest, you should understand what you're investing in. Don't just start investing because, oh, I heard people are making money in the stock market. Invest because you understand what you're investing in. Let's say you buy Apple phone whenever they release new ones. Because you understand that Apple has good phones or quality phones, that's why you buy their phone. So if you believe in Apple, like whenever they release their new iPhone, you can start investing in Apple so that you become a shareholder in Apple. So when Apple grows, you also gain some money in Apple. As I said, think long term. With the stock market, you have to think like 5 years or building wealth for the future. Otherwise, you may lose money. If you do it like, oh, I'm trading, I buy this stock as soon as it goes up, I'm selling and buying, you lose money fast. But then if you stay consistent and invest consistently, if you believe in the stock, whether they go down, whether they are struggling, you continue to invest in long term. When they find their footing, that is when you start gaining money in it. How can you start investing in the stock market? You can start by opening investment account. In the US, we have different investment accounts like IRA. We have traditional IRA, Roth IRA. You can also invest in your company's 401k. You can open individual brokerage account through brokerage companies like Robinhood, Fidelity, Vanguard, Wellfront, Charles Schwab. And if you're in Ghana, you can start investing in the Ghana Stock Exchange through an app called IC Wealth or Bamboo. So I know IC Wealth is just for Ghanaians or West Africa. But then the Bamboo, you can use it in many African countries. And one good thing about the Bamboo is that you can invest in foreign stock exchange. Like if you use the Bamboo in Ghana, you can buy stocks in the US stock exchange or UK stock exchange. So that is how we start investing in the stock market. So you open a brokerage or investment account, you put money in, and then you buy the company you are interested in, or you've done your research in and you know they have potential to grow, or you just simply go through the index fund or mutual fund or ETF route, and then you do it, you set it, and you forget about it. You can even set it in a way that as soon as your money gets into the investment account, it will invest into these stocks for you automatically. You don't even need to do anything. So investing in the stock market is the most passive thing you could ever do, because you just need your phone. You download the app, you create an account, put money in, you buy a stock, you sleep, and then the stock will be working for you. That is the most passive way of making money. You sleep and your money will be working for you. So to keep it simple, the stock market is a place whereby we buy and sell the shares of a company. Over time, these investments grow and help you to build wealth. As I said, you don't need to rush. You just have to go slow, be consistent, and then let your money grow long term. That is when you see the benefits of the stock market. I'm telling you this because I've been investing in the stock market since 2018 and I've gained tremendous returns. That is why I'm sharing, because we immigrants, our mindset is to work, save, but we don't know that when we invest, the money we are working for can also work for us and lessen our burden. If this video was helpful for you to understand the stock market, please subscribe, share, like, and let me know in the comment section. Have you already started investing in the stock market, or you're about to start investing in the stock market? Thank you for watching, and I will see you in my next video. Bye.